China, I just think it's so funny because one day China is the greatest threat ever faced by America as a strategic competitor. The next day, China's fallen apart. Well, China is having some struggles right now, but there could be a silver lining to China's struggles. But first, let's talk about what is actually happening right now in China, why a lot of people are crapping on China right now, and what that could mean for, well, everything. This article from Business Insider: China is doing everything it can to conceal its true extent of its economic turmoil. Read a few quotes out of here for you. The reality of China's blob era pushed its way to the center of the global news cycle earlier this month when the Chinese government announced that it would no longer publish the unemployment rate for young people as part of its monthly jobs report. The final release for the data series, July's numbers came at a record high of 20.5%. The number had become a global shorthand for China's inability to reignite its economy since the president ended the country's COVID-19 lockdowns. You know, classic governments. When the numbers don't work for you, just stop talking about the numbers, man. Easy peasy lemon squeezy. Yeah, pretty crazy stuff, without a doubt. Further on, even as the main drivers of China's economy stumble, there'll be no direct support to households to power through this fragile period. Xi has been telling his people to prepare for a struggle, to be ready to put geopolitical concerns over economic ones for the foreseeable future. Bad news, of course, for multinational corporations like Nike and Starbucks, who are banking on extended growth happening in China. The struggles that China faces are real: economic pain, foreign investor concerns, crumbling demographics. It's clear that President Xi will not bend on his vision for the sake of the country. He'd rather shut out the world. Interesting. And of course, all of this Western media attention on China's economic situation and the collapse of China, and how long until all of us people over here on YouTube start making videos? China's collapse in 21 days, 17 days until China Armageddon. It's coming. It's coming. But a lot of this stuff you have to see in the geopolitical realities of what's going on in the world. The BRICS group is rising internationally. 6 new countries are set to join in early 2024. China's economy might be going through a bit of turbulence right now, but it's unlikely that China is going to go to zero. Even if China experiences some problems, well, the USA is potentially also going to experience some problems. Europe's currently experiencing some problems. This global situation that's been happening has been affecting a lot of countries in a lot of places in a lot of interesting ways, from bond markets to the price of oil to supply chains and beyond. But a lot of crazy happening in global markets recently. But you can't, I think, ignore what's happening with BRICS when you talk about China's current economic situation. From Yuan Talks here, China released a package of measures to boost the stock market. This is pretty interesting. So they halved stamp duty, they slowed IPOs and refinancing, and they restricted major shareholders' stock reductions. China even ordering state banks and funds to buy stocks. You know, things are getting dicey when you're calling up the banks saying, would you guys buy some stocks, please? That'd be great. Thanks. Oh, boy, oh, boy, oh, boy, oh, boy, oh, boy. Spectator Index pointing out, for the first time since the global financial crisis, China is set to cut interest rates on existing mortgages. On existing mortgages. That's interesting. A lot of people starting to say that this could be where the global credit event starts. There's been people starting to warn of a possibility of such a scenario, that we could have some major global credit event. It could start in China, could start in the USA, with the US companies and the bonds and the slowdown in lending and the struggles of the banks and all that stuff. There's a lot of pieces in the global economy that are not looking great right now. And that provides a lot of headwinds towards market pumps and seeing Bitcoin go to the moon and all that kind of stuff. before we get into the rest of the story, just a quick note. If you are an altcoin investor, if you are someone who wants to find a way to make money on altcoins, but you don't know where to get started, you don't know what the heck is going on with altcoins, well, we made a great course for you. It's called Mastering Altcoin Investing. It's the course that I wish that I had when I started off investing in altcoins back in the day, because I know how it is. You get into the altcoin juggle, it's a savage place where a lot of people lose a lot of money. Well, we designed this course to hopefully help put you on the side, the winning side of that trade. We talk about the altcoin basics, we talk about the fundamentals, the technical aspects you need to understand, how to actually find and analyze decent altcoins, the different approaches to investing, approaches to taking profits, psychology of the market cycles, and much, much more. You can find a link for that in the description of this conversation, or you can go to thewealthmastery.io/courses where you can learn more. Now, back to the Chinese economic turmoil. So this is another crazy, there's so many crazy stats coming out of China right now. China's stocks are trading at their lowest level relative to the S&P 500 since 2001. Yo, that's crazy. As mentioned, China is reducing tax on stock trading by 50% to try and boost the market. Cool. I mean, they're pulling out all the stops here. They are trying to get it so that people are going to go out and ape into the Chinese stock market. They want company valuations to pump up. They want people to support the Chinese stock market because it's been taking some hits, especially after the Evergrande collapse last week where they went bankrupt. I mean, look, everyone had known Evergrande was going bankrupt for a long time. We're all surprised it didn't happen a lot sooner. They finally put the nail in the coffin. It's dead. But that has spread a lot of fear through the Chinese markets. So China's got the tax cuts. When's the last time that China did such measures? 2008. Generally, when you're talking about finance, you don't want to reference like the last time this happened was 2008. Generally a bad year, 2008. And a lot of people and a lot of signs and a lot of economic indicators are pointing to the potential for some kind of credit event to be taking place or some kind of major financial event to be taking place. And we keep not having it happen. Things keep breaking. The Fed in the USA keeps pushing to break things. China's here trying to reignite its economy, but there's a lot of things that are weighing this reality down. Again, more people speculating, is China on the brink of a credit event? I need to make a whole separate video on credit events for you guys and really break down how such events happen and play out and all that stuff. But holy cow, a lot of worry. Again, markets don't like uncertainty. Markets don't like fear. But one thing that markets do like, liquidity, baby. Oh, my liquidity. Yes. Yes, sir. Give me some liquidity. Oh, I need it. I need it. The bankers, the stock markets, they're addicts. They want it. They want it bad. Oh, some more liquidity. I need my fix. Come on. Where's my liquidity at? Oh, and they're going to get it. They're going to get it. Right now, they're not getting their fix from America. America's not giving them their liquidity fix. Neither are the Europeans. Japanese, they're giving liquidity fixes right now. They're dealing. They're giving it out. But nobody whips up a good mix of sweet liquidity like the Bank of China, man. So they have been pumping money back into the market. Last time China started pumping money back into the market big time, last year, basically late October, early November, China led global markets out of the slump by injecting money. That injected money has so far not had its intended consequences. The reason China started pumping money into the market, they were pumping money into the market because they wanted to reignite the Chinese economy. Hasn't worked yet. Youth unemployment's up. Stock markets are taking big hits. They're calling up and begging banks and investment funds to buy Chinese stocks, please. That's not a great sign. So China is probably going to have to print a lot more money. And while, as I mentioned earlier, Xi Jinping has kind of ruled out up to this point doing stimulus checks to people, they may end up having to do that. But China's a big country, there's a lot of people there. That's a lot of stimulus checks. So they may not want to do that. They may choose to provide liquidity to the market in other ways. But China will need to provide liquidity into the market. How they do that, we will see. But rising liquidity out of China does have the potential to put the sales in risk on markets. It can be a little bit of a wind to pick things up a little bit. But for how long? That's a question. With everyone else tightening, of course, we need to see the US stop tightening. The Fed's really, of course, the big question here. When will the Fed start easing in a significant way? When will the Europeans start dumping liquidity back into the markets? They can only have so much economic pain before they have to turn the printers back on. The Europeans are already experiencing economic pain. Germany's in a recession. A lot of the Eurozone countries are dealing with a lot of problems. Big inflation, one of them, which of course makes the money printing a harder thing to do because they got themselves in trouble in the first place for printing all this damn money. Still, though, they can't avoid printing money forever because when you look at modern monetary policy, central banks, they print money. It's what they do. And the only question is, when will they start printing a lot more money? China may have to face that question sooner than later.